Good morning. Welcome everyone to VIP pre-market prep. Got a lot to discuss. Futures don't look good right now. You can Nasdaq's down 1.5%, ARK down 1%, RK down 3%. I think that's because of some economic data that's been coming out and Target earnings continuing to validate what we're seeing with the profit margin compression. We'll talk about that in just a second, but let's just look at the levels on QQQ. I've been very bearish longer term. I'm still looking possibly for lower lows on the NASDAQ. I was hoping we get a bear market squeeze, bear market rally. We got a little bit. My target was 310 or the 20 DMA. I don't know. Maybe we're not going to get there, honestly, because first we had Walmart earnings come out, then Target, all validating each other, triangulating here. Amazon, same thing. So maybe we're not going to get that 310 plus move for a bear market rally. So I'm going to maybe think today about being a little more aggressive on selling covered calls. I'm going to go through my whole portfolio and see what I could generate some income on. And if there's anything that I think is a risk asset I shouldn't be in, I may be cutting that today, because fundamentally I don't like what's coming out of these earnings, and the recession talk is just growing and growing everywhere. So uh, before we get into Target, I want to talk about wheat, corn, soybean. Okay, those are the food stocks, and right below it is energy. So we talked about this being a theme this week because of the increased geopolitical tension again in Russia and Ukraine, and they all continue to be strong this morning. Wheat's pulling back a little bit, but still holding this 200 period moving average. That's the 5-minute candles. Okay, so wheat is still pretty strong, not breaking down yet. Soybean is breaking out, broke over the 20 DMA right there. And soybean, by the way, is highly correlated or increases demand of fertilizer. Okay, so corn looks pretty good too, man. Good for that price, not good for everyone else. So that's the situation with food and energy. I shared a link in our community about riots and things happening, and protests in Iran because of high food prices, and that's going to spread. And if you think America can be completely insulated and everyone happy and fat and rich here while there's like riots all over the world because of food, think again. That's not going to happen. At the least, we're going to see, I think, possibly a severe recession because of what's going on here. Could be wrong. I hope I'm wrong. Anyway, let's move on. So let's go to a few specific earnings. Actually, before we do that, I want to go and review the food and energy picks. PI, and you can see it's been up sharply since we called it early Monday morning. I'm still in this. I've been trying to sell covered calls. I didn't quite get my price yesterday. So I may be out there today going for it, but hopefully IPI and Moss. I'm also in Moss. I got into Moss early this week with the continued strength in food prices. Hopefully Moss and IPI can turn around, do a red from pre-market into a green. But just in case, I may be looking to sell covered calls or take some profits on Moss and IPI in case we have some sort of scare with the indices over the next coming days or weeks. Okay. Then we have CCJ, which is my uranium pick because of the high energy prices. I wouldn't be too alarmed about this 1.5% drop. It's sitting right at the 200 DMA inflection point if it breaks. But you know what? Let's look at UUUU. The uranium company came out with earnings the other day, and that's it actually ended up dropping. It was higher this morning in the 660s, 640s. But I am just sticking with the theme that if USO and particularly UNG, if natural gas keeps going up, that's going to be a sentiment tailwind for uranium. So I think I'm going to hold on strong to the additional CCJ shares I picked up this morning. Okay. Now let's get into some of these earnings. So Target showed the same exact issue we saw with Amazon and then with Walmart the other day. And by the way, there should be no doubt now, right? I was predicting a recession since like November. And then when Netflix came out, I'm like, this is an early sign of a recession. I could barely find anyone who agreed with me. But at this point, if you read all of the commentary everywhere, people are trading down. They're not spending as much. It's just crazy. The only reason that like revenue year over year is up, and just barely so in a lot of these reports, is because prices are increasing, but people are transacting less. That particularly showed in Home Depot, which was able to actually pass on those higher expenses and maintain their profit margins. But Target, Amazon, and Walmart were not able to pass on those higher expenses, or not able to manage these issues properly. But in any case, let's look at where this is going. Oh, look at that candle. But right there, you see the 200-week moving average, and that's always been my target. I've been talking about it with like every single stock and the indices and everything, right? And that's like a minimum support level to in terms of removing the COVID excess out of the economy. So we're headed there. It's obvious. That's a magnet at this point. All right. So Target is going to tag it, no doubt in my mind. Okay. And then you can see the same exact thing with Walmart the other day. Walmart's going to tag this 200-week moving average, no doubt in my mind. Okay. Now the question is it going to consolidate and the 200-week moving average moves up? I don't know. But this is to me a best case scenario. Both Target and Walmart hitting that 200-week moving average, and Amazon actually broke it, which I think is a clue that what may happen to Target and Walmart. Although Amazon maybe has some other issues with building out too much inventory and scale and warehouses and capabilities with COVID. But speaking of the 200 WMA, I want to just move back here, and there's your target on QQQ. Okay. All right. Now, earnings. I want to go over. Let's do Global E first, because I think something really interesting happened yesterday. So Global E, I guess they missed on their earnings. Now, I'm not an expert in this company. I didn't like pay attention to the details or the conference call, the transcript, but something good must have been in there, or it was just simply oversold. Look at the volume here and the price action. You went from deep red and did a huge reversal to like up 20% on volume that was probably record. Yeah, it was record volume by far. Um, I don't know if you can quote it. Do we have average volume here? I don't know if that's a stat that's here, but something I think someone told me is like 10 times average volume. So in any case, that to me could be a sign of capitulation in this particular stock, GLBE. So despite my bearishness in QQQ, etc., this is the type of price action I'd like to see to mark a bottom. So maybe the bottom's in at like 15 and change for GLBE, right? So if the Nasdaq ends up going lower and everything, maybe it rechallenges that low. But I think there's a good chance that this is the bottom, just based on price action yesterday. So if you're interested in that, that's a clue. That's a sign. Price actions try to tell you something. That's a sign and a clue to look deeper, look at the earnings report, and see if you agree with the market reaction here. There was a analyst today, Morgan Stanley, maintaining over with a $34 price target on GLBE. So something to look into over there. ZIM crushes it once again. Man, this does not make sense. This thing is like trading at a 1.5 PE. They've issued $20 in dividends so far in the past year. And I think they announced like another $3.50. If you add back that $20 in dividends, this is trading close to its all-time high at $86. Now, we went through this last time when, let me switch to the daily chart. After earnings, I was like, man, these earnings look great. And we had a little bit of a discussion and a debate in the community, and the initial reaction was a sell-off, and I was so perplexed. I'm like, what the hell is going on here? I don't know if it was right here, maybe. Yeah, I think it was like right in here. It like initially sold off, and people are like, yeah, it's a cyclical business, and what if the shipping rates go back to pre-COVID levels? And I'm like, I don't care, man. It's like a 1 PE, and they have like a $17 dividend. I mean, did not make sense. And it was, I guess, the shorts trying to manipulate for like a day or whatever, and then boom, like the thing went straight up. So I have a feeling the same thing can happen here. Despite my recession worries and everything, it's just too cheap, and their balance sheet is too strong. They have some like 800 million cash, no debt, and there's just so much room there. Like, I'm not an expert in fundamentals. I don't have an operating model in front of me. I can't tell you what happens to their profits if the shipping rates go back to pre-COVID levels. But you know what? At the end of the day, even those fundamentalists are speculating that the levels are going to go back to the shipping rates are going to go back to pre-COVID levels. And who knows if that happens? Even if there's a recession, you have big inflation. I don't know. They're just too deep in the green, too deep in the green to think the PE should be 1 or 1.5. You can go look at these numbers. I mean, they're just unbelievable. Like, I've never seen anything like this. Um, and they increased guidance to adjusted EBITDA of $8 billion. I mean, that's like one time their market cap. I mean, that's crazy. That's crazy. I don't know. All right. So do what you like there. I actually took a small position in pre-market, small, just in case it does sell off like last time, and then I'll get it off. I'll buy more on the sell off. So that's the story of the ZIM. We talked about Moss, IPI, CCJ. We'll talk about QUIK a little bit. I'm not an expert in QUIK. It's been on our radar since AEHR, semiconductor industry. They had earnings yesterday. I did a quick review. I'll give you my little bit of an analysis based on not knowing the company really well. So it may be a meaningless analysis. But if you are an expert in QUIK and you want to give our community update, let me know. But I went through the transcript in QUIK, and I recognize, and you see here that it's been moving up, pretty strong move from like 5 to 6, and I recognize there seems to be good momentum in the business based off of the transcript, but financially, I don't see any guidance or any. I think they guided for profitability like by the I think they said middle of the year or middle of next year. I don't know. But if you look at the revenue guidance, the top line, to me, it doesn't really seem sufficient to get to profitability by the end of the year. Maybe they're cutting OPEX more. They did reduce OPEX sequentially. But and I also don't know to what extent are their products may be impacted by a possible recession. I will say the chart looks good. It looks like a big, gigantic, or multiple W bottoms here on QUIK. So I don't have a position. If you're familiar with this company, if you think it's great, let us know. I'm not terribly surprised it's not like taken off in pre-market or anything like that. But we'll see. I'm curious to hear and learn more about QUIK if you're an expert in that. That's just a paint here, 780. That's below 100 shares. So Andrea, that doesn't mean much. And CLFD, which we highlighted yesterday, wow, look at that move is that pre-market move to 58 might not mean anything. The close was 56.87. That's your real price there on CLFD. So we had our update from Chris Tarbert on the acquisition. I actually picked him up on his analysis yesterday. So we'll see if that continues bucking the trend. And that's pretty much all I have. So really, to summarize this, I would say I hate the fundamental news coming out. I don't like the earnings we're seeing at Target and Walmart, et cetera, et cetera. I'm not convinced now that we're going to see bear market rally of 310 plus. So I'm looking to take some risk off the table today, maybe sell some covered calls. You can see here USO, UNG energy still hot. So I'm going to hold tight to my uranium overweight that I got earlier this week. And I'm going to hope that our potash stocks do well a little bit. Who knows? Because wheat's down 2% at some point. Look at that. It's right on that trend line. So, if wheat breaks down at some point and wants to go back and retest the 11, you can see those fertilizer stocks go down. So, all right, that's what I'm looking at. That's the story here at StoryTrading. And hey, if you want to get this pre-market prep every morning in real time, you could do that by going to storytrading.com. Otherwise, you'll get the delayed report over on social media at 4 p.m. And we'll continue collaborating with everyone in the community today in our VIP WhatsApp rooms. Have a great day.